Hello and welcome everyone to the weekly Delphian meeting. Thank you for tuning in. Today's agenda, we'll go through our regular market update. We'll update the earnings trades, and then Joe has some Fibonacci numbers charts to go through. So that's what we'll do today. Let's get started. Okay, overall market, we look at, Russell's still in one. Hasn't been turned out to be a good one so far. SPX transitioned, and that was almost like market top into state one. So we'll go into those. And NASDAQ still in 5. VIX did get a little spike here, so that's out of state 8 into 7. Overall green pie, you can see, we shrunk 10% from last week. Pretty big drop overall. State ones are still pretty high, but a lot of things are, have been transitioning to the red. So we'll take a look at that market pulse right now. This is state 1 and 8. So you can see we pretty much, for the state ones, we pretty much flatlined right around 36, 37. And that was for, looks like a couple weeks there, and started seeing an uptick here. Around the 8th on the state 8. So, and that's been climbing. So now we're at 18, almost 19% on those. Kind of one of the other things you can see here, about a month ago there, the state 7s, and I'll just pull it off there, pretty much started, dropping off significantly, straight line pretty much down. So when you see that, you want to see, like the 5s start building up, and they were up until a point here. So at this point right here, February 3rd, this is kind of like hindsight, but you can see the 5 started dropping, and, we got pretty much a level off on the 1s. So those 5s at this point, we're not pushing the 1s any higher. So, that's kind of where we, so, basically, market tops up here, but the 5s were not transitioning, and, they dropped off, and now the 1s pretty much in the past, day or two, because Monday's holiday, started dropping off. But, they held that level, but, the 5s should have been pushing the 1s higher, if we're going to be more bullish, but that did not happen. So, so this initial one looked good, the 7s moving into 5s and 1s, and then, the 5s just couldn't complete it there. So that's kind of where we're at. 7s are getting pretty low here too. So, okay. So that was that. New highs, new lows, nothing really going on. We had one spike in highs and pretty much, nothing yesterday. So, to get the new lows, these 8s have to get up, higher, and we have to be an 8 longer. So, we may start seeing that. If we continue this downward trend, we may get some spikes in the new lows, but so far, this year has pretty much been flat on both ends. So I think market's really trying to figure out direction. Got super bullish on this day, and then since then, not so much. So, we got a little turn back here on the SMA. So, we had this cross back here, January 11th. Pretty good signal so far, but it's pretty much turned over as of yesterday. Starting to point at each other. So, just, if we get another cross, obviously it's not a good situation. So, okay, bullish, bearish. Joe did a great job with those, the high points. So, I think that was right around here, this meeting. So since then, we've gone from, 83 pretty much down 62. When they start turning like this, they usually at least get close to crossing, if not crossing. Typically when they turn that kind of sharply. So, we'll see if we get continuation here. But obviously, that 83 and Joe's analysis came in pretty good there. So, okay, let's move into state modeling. So SPX, we went in on the 16th, the state one. So, that not kind of strange. It was on a down day here that it transitioned into one. So since then, we've had little down and then big down. So now we're actually into the stops. This is called the stops 4,000. So, obviously that's going to be a very key level, in the next day or two. Sometimes these in state one, we can get a good bounce off of here. So if that doesn't happen, usually within the next few days, and typically, just from seeing a lot of state modeling, if we don't at least start showing support or, get a bounce within a few days, that it could get ugly from there. But it was obviously a good sign. It went into state one, but obviously it's been very poor from the start here. So, the typical pattern not being followed. So, we can kind of throw the typical pattern out and the typical expectations. So really, I think the focus, at least modeling wise, is, the stop loss. If it's showing good support here, can we get a run back up to at least the entry price, and we'll just call that 41. Bigger picture, that 42, which is our big range for this one is 38 to 42. So if we look at, we got up to 4195, and that was pretty much all she wrote. Didn't even breach the 4200 on this pass. So honestly, we're right smack dab in the middle of the range, which is right around 4,000. So, it's still acting range bound, obviously, but, I think the big thing to focus on are, the 4,000, and, the same thing with Russell's right at 1,900 again. So, if these things start acting like resistance, this 4,000 and 1,900 for the Russell, that's obviously a bad sign. If we get if it's showing support, then it's definitely a lot more bullish. So next few days should, within the next week, definitely pan out which way we're going here. So chart wise, I'll throw up our levels here. All right, so that's the 42, and down here's the 38. So you can see we're pretty much smack dab. Had that test here, like I pointed out on the other one. We had this false breakout. We talked about that last week. Russell had that same time frame too. Russell's chart's a little different because it also broke out like this, but we'll go through that in a minute. Obviously, 38 is going to be really strong support, but right now we're smack dab right in the middle of this range, and that's been going since pretty much, let's just call it June of last year. With a few kind of false breaks each way. Well, that's kind of our, we're right in the middle of, our range. So,
Hey, Josh.
Yep.
Before you move on to the next chart, could I just add my 2 cents here?
Yeah, sure.
No symmetrical ABC coming out of the October 13th low here. We did have a little bit of a symmetrical move in the Russell, but I agree with your horizontal levels. One interesting, and I found it in all three indexes as you go through the charts, but the 39.25 range on here, which, doesn't look like much on the chart, but 39.25 is a 3/8 retracement of the December move to the highs. And it's a 5/8 retracement of the October low to the highs. So that's just, a convergence there in addition to, the 3,800 level, that 39.25. And if we happen to get down there, maybe something to keep track of. But as you say, our states, hopefully that stop level will prove to be, a bit of a base here, and we'll rally from it.
Right.
We happen to keep going down. 39.25, I think, is a level to really pay attention to.
Okay. I think so. Yeah, kind of the other things you just kind of see here, basically when we crossed over, this is the 50-day. So you can see, like right here, it was showing support. So we're pretty much right in that kind of same range here on the 50. Good bullish markets at 50 is going to show real strong support. So, just kind of very key levels here that we're on, that 4,000 range, if you're bullish, I don't know if some people are, you want to see that get back above the 50-day and, that act as support up long runs. And we've shown it in the past, a lot where that 50-day is really strong support on, those up moves. So, yeah, I think that was it. SPX. Let's look at Russell. So, Russell started out pretty good and then this huge down right at the stops. And so very similar chart. Got in a few days, led a few days, but we're basically same thing as SPX, right on the stops. And this is your stop range, 18, 1890, call it, but really, the level here is at 1900. That's the broken record. That being a very key level. So, currently, I think we're below 19, but we popped out of that range into the 2119 range, back here basically. So, and it did show support here, and then which was a very good sign. We got to bounce up, and then yesterday was just blew through everything. So so that's where we're at. Obviously, you're going to want to watch these levels too, state modeling wise, but really it's just 19. So we have to see if these things can bounce off, and they do it quite a bit. Bounce off those stops. But if this isn't showing support, could get ugly. Okay. I did want to pull this out and show you. This is the Russell chart. So this is this is that other false breakout, of that 1900 range. Let me. It looks very, very similar. So that's a 19 and our 17's down here. So that's where we've been. But just kind of wanted, I mean, it looks very similar. We had an up, down, up, swoop. So up, down, up, swoop. I mean, it's almost a mirror image there of each other. From here, it got pretty ugly. You got a retest. So, I don't know if just drawn, what I see here pattern wise, but, this 19 is the level, has been for a long time. So right now, I think we're still below, the market's up a little, but still, yeah, see Russell's like, it's delayed 15 minutes, but pretty much right on 1900. And this one's right on that 4. So it's got to figure it out. I would say within a day or two, whether that's support or resistance, and that's going to be our key. overall. So 19, if it gets above, then we're in the 2119. If it stays below, then we're back in 19 to 1700. That's kind of where we're at. And, both those indices have really strong, like support. This 1700 is been very strong for Russell, but, that's a ways down there. So, okay.
Hey, Josh.
Yep.
Yeah, sorry, just same thing. 1700 is way down. The convergence of the 3/8 and the 5/8 retracements is basically 1810 to 1825. Just above where that moving average comes in, just as an FYI.
Right. Okay. Yeah, and the other thing, this is right on that 50. So, obviously you want to see both of them stay above their 50s. That's a, if that 50 showing support for both those, and that's very bullish overall. So, okay. Fed meeting. So we're a month out. It's, 22nd of March. It's moved quite a bit, from last week. So we're right around 87. So we dropped quite a bit for the quarter, moving to the 50 rate hike, but we'll keep our eye on it. Balance sheet, they had a decent runoff, the previous week. So, 435. So it's about like 50 billion runoff. Still got a long ways down to our, 75. That's kind of our line in the sand, where, the last time, the 15% drop, things got crazy with overnight lending and stuff like that. So I haven't seen too much in the sign that, any kind of signs like that. Okay, charts. Before I go through that, I'll just, open up to questions, then I'll go through, kind of my graphics here. Anyone got any comments, questions? Nope. Okay. All right. So here we go. This is for Joe. All right, Joe. Look at this, baby.
Wow.
That's the Dow Internet Head and Shoulders. I don't know if that's pretty crazy, right? I'm not, I know Head and Shoulders. I don't, I've never, whoops, sorry. That's my, wrong one. Hold on. Yeah, so I've never traded a Head and Shoulders, but I know what they are. And I saw this, I thought it'd be very interesting. I don't know the symbol FDN, but definitely that is, is that a, perfect copy of a Head and Shoulders to you?
Sure looks like it.
Yeah.
You break that neckline, I think it's going to be below zero. That's the problem.
Yeah, the size of that thing, I mean.
Exactly.
Wow. Yeah.
Dow Internet. Yeah, I wonder what the heck makes that up.
Yeah, we'd have to, let's see if it'll show FDN. See what they got on the, there you go. Amazon, Facebook, Alphabet, PayPal, Salesforce, Snap. Wow.
Pretty well balanced.
Yeah.
Percentage wise. Yeah.
That's a lot of momentum names in there.
That's
no
Netflix.
Sure. So no, there's Netflix. Yeah. No Apple. So interesting. Anyways, I saw that one. Like, wow. Okay. This is another one. So I showed this to Joe the other day. So this is S&P nominal earnings, going back to like the 50s. So it's basically been in this kind of trend line channel for the most part, outside of right here. And, the guy that was posting this was basically like, okay, once we get to that top trend line, things can get pretty pretty hairy because it's basically overcooked. So that's what his thesis was on this. I thought it was a very interesting chart. I mean, just shows you what's that? Thought I heard someone. Oh, that's video. Okay, yeah. So I mean, it just shows you, like S&P is a great long-term investment tool. I mean, you see the growth here, pretty much strong channel. So, picking your tops here. I think this is like an '08 type of, '07, this .com bubble. I'm not sure this exactly when these are, but very interesting overall. So I wanted to show that, but definitely, if it's down here, definitely, buy your load up on stocks, if you're on near the green line. So okay, that wasn't it. Oh, this is the other one. So we talked about this, like, I think I've shown this before. It's just, Fed tightening always breaks something. And I've said that before, and I saw this chart here. Just kind of goes back, to all the times. Obviously the most recent time is tech bubble. This was 18. That was when they were going gangbusters, raising rates, and had to flip real quick. But yeah, so crisis, subprime, tech bubble, the raising rates, they seem like they're, people are expecting higher now, at least a little bit. So, if it's not a soft landing and they don't, turn rates around by the end of the year, I mean, that's pretty much what's priced in. So, I don't believe that's going to be what happens personally. So I think, they're very ambitious with their Fed movements. So, okay.
Josh,
Yep. Hey, Lee.
Josh Lee, when you say that it's pretty much baked in now, that how do you know what's baked in, or what is the indicator that it is baked, that something's baked in?
Well, you can go, like, there's, multiple tools you can go through, but, I've seen some, like research reports on people's expectations for interest rates, and, by the end of the year, like, we're below where we're at currently. You can go out in this tool too. And, I think it's changed a little bit, but it never, there was nothing above 5 pretty much before, or 5.25 type thing. But so you can see here, this is July, right? So in July, previously, everything, the median was 4.75 to 5, right? So
Right.
now, I mean, if you look at it, the median's gone up, a quarter. So now they're saying, okay, instead of, this terminal rate at, like, where we are currently, or one, tick above us, now they're saying it's another, now it's 5.25 instead of 5. So, could it be, if it goes higher, that's just people's expectations are way off on, what's going to happen, overall. So this is this is for, I mean, if you look at this is November, all right? So
Right.
November, the median was kind of in between where we are now, and then next month's, quarter hike. That's where, everyone thinks are going to be in November, right? Now
Mhm.
it's 5.25, right? That's kind of like the median area.
Mhm.
So that's a shift in expectations, right?
Right.
So people were way off, and they're like, oh, inflation's coming down. Say, I mean, it's everything, same thing. Here, the median is like below where we currently were, pretty much, like, it's like kind of in between these two, but this had more. So that's a cut by December, right? So
right,
now, now, it's kind of between these two, and, that's like a full point higher than kind of where, the expectation was. And that's within like a month time frame.
right.
So, and now, it goes from, 33% to 1, and
Mm,
so all the expectations were wrong, right? All this, they were wrong. So that's how you get things right in the market, say, okay, everyone's in la land, soft landing, we're gonna cut. And, the Fed has been saying they're not gonna cut this year, right? I mean, flat out said that, but they had it priced in, like, at least like, okay, we're gonna at worst be at, this level, 450. That's their at worst, a month ago. And, their kind of base case is like, okay, quarter cut. Now it's completely different, right?
right,
So now they're pricing in no cuts for this year, pretty much. And maybe more hikes. So, I mean, if the inflation, if the Fed follows this old policy of tightening till something breaks, they're going to break something,
right.
and that's the concern. And people didn't believe it, a month ago when I mean, he said it a lot, they're not going to cut rates this year. So now they're starting to believe it, and if they think
Uh-huh.
it's going higher, it's going to get, I think, uglier.
Yeah. Okay,
So it's
thank
a
you. Yeah.
mispricing in the market, Does it make
Yes,
sense?
yes, yeah, it's
Okay.
good. Thank you.
It's a great tool, and we owe it all to the Sadir for finding this. Shout out to you, Sadir.
Thank you.
Yeah.
I
So,
do think you're right, though. When I watched the CNBC commentators over the last month, there's so many that were saying the Fed's going to have to reverse course. The Fed's going to have to cut.
yeah,
Right? And, the Fed just keeps reiterating they're not going to do that. And it took them a long time to believe it, as you
right,
point out in the data, right?
right,
They've never said they're going to do that. So,
right.
but people
Yeah,
thought they would have to.
yeah, man, exactly. And this kind of funny story, like my daughter's soccer game, like I'm, friends with some of the parents. One of the dads he owns like a tree trimming service. And we talk about the markets all the time. And he's like, oh, we're gonna have soft landing. And I'm like, I'm like, it's not gonna be soft. I mean, if they're, the tree trimmer saying it's gonna be a soft landing, I'm like, it's not gonna be soft landing, So, I don't know where he gets his news from, but like if it's down to like, the gas station attendant and people that, that aren't in the markets all the time, if they're being sold something, then it's probably not going to happen. So thought it was kind of funny.
And the other thing, by the way, I think, tracking the Fed and the balance sheet like you've been doing,
Mhm.
the interest rate projections and the balance, it's very critical to investing. I mean,
Yeah,
the Fed is reducing their balance sheet.
right.
That takes money out of market,
Mhm.
so, I think that reflects also in the fact that a lot of the number one state ones seem to be like SPX and Russ seem to, like you were pointing out that Russell graph, the state one seems to be a peak in this case.
Yeah,
That I remember a state one in the S&P in 2020, no, 2021, or maybe it was 2020, where it went past the average move and just kept going for like 30, 40 days
right,
in
right.
state one. I don't know if I'm remembering 2020 or 2021, but
Mhm.
it went into state one and just kept going past target 3 and just kept going for another 20, 30 days.
Right.
Whereas this time with the Fed doing what it's doing, that state one seems to be, at least for now, it seems to me like a peak.
Yeah, well, it was, I think, for SPX. I mean, it turned down hard after getting into that, but yeah, those are good. It's a good point, Sudhir. Yeah, I think we can find better tools. I brought this up a couple meetings ago or something. This is Fed liquidity, matched up with SPX chart. I think tracking this is like the balance sheet number that we track, and then you take out, the reverse repo and, the assets on hand. And I didn't see an updated for this, but I'm gonna have to go to the source, and see if I can get regular. This seems like a pretty important chart. I mean, the Fed's driving, the market with, either QE, easing or tightening QT. So right now they're tightening. So, it's definitely a headwind for the market. Yeah,
and this one, I don't know the date that you pulled this, but clearly shows SPX line overbought compared to the, I guess, purple line, right?
Yeah, you have
I don't
one
know.
here, and then you had one here. Yeah, gets a little ahead of itself, right?
Mhm.
Yeah, it's definitely a very cool chart. I'm gonna have to go there. I didn't, see if see if I can get this on a regular basis. I think this is probably one of the more important charts you could follow. So, and I'd be interested to go back, and see, at least since what, 07, not 07, like 09, and kind of see how well it matches up, because they've been pumping a lot since then. So, but very good points, Sudhir. Thank you.
Mhm.
And Lee, also, thanks for last week. I thought, haven't been able to dive into McClellan anymore, but I will, I promise you. And I thought it's
Oh, I
great.
did have a
That's
comment there on Lee's
Yeah.
thing. I don't want to interrupt your flow, but
No, go ahead.
okay. So I had a thought, your entry, Lee, was going back was the day after the double bottom, correct?
That's good. That's a good starting point. I actually entered my date on the day of the second double bottom, but what you're saying makes sense.
Okay, so when I got to thinking about it, when you're looking at it in real time,
Mhm.
you don't know that it's a bottom
Right.
until you get an up day, so it's bounced.
Mhm.
So
Yes.
the only real entry would be 2 days after the bottom.
Okay.
And I wonder what the back test would show, because, if you're looking at a graph going downward, you have to have one up day to call it a bottom,
Right.
right?
Yeah. I understand your point. I
And
think you're right.
so you have to wait till the end of the up day, and you enter on the day after the up day. And I wonder what the back test would be if you move the entry just one day. Because on the day that it's falling, you could continue to fall. You don't know you've hit the bottom.
Right.
So I'm curious how much of the profits were on that first bounce and how much were a continuation where it kept going, a few percentage points.
Yeah, no, I think you've got a good point. Since there were 170 of those trades, I understand what you're saying. It's valid. I don't think I'm going to go back and change all the dates to a
Sure,
plus
sure.
1 day. But I don't disagree with you. So there,
Yeah.
I think you know.
Actually,
Just something to think about.
Lee, that'd be real easy to do. To add 1 day.
Is it equal E date, paren, whatever your ending date is, And then
I think
what-
this is months, so I'd have to figure out the one for, a date for a
Uh-huh.
day. But yeah, I think, because then you could just, create a whole new column with those dates, just adding one.
Sure.
Yeah, I don't think it'd be that hard, But anyways, that's a good point, Sudhir. Yeah, because when you're looking at it, it's different, right?
Yeah.
Yeah, it's always different when you're trading, live. You can't see the whole future graph when you're trading live, right?
Mm-hmm. Now, Lee, you said you tried to get this in Thinkorswim, right? They couldn't do it.
Correct.
Yeah.
I couldn't get a indicator to show on the McClellan indicator,
Mhm.
the value of it. I called them and the guy couldn't get it to work. And then he even sent it to the help desk for the help desk, and they couldn't
Right.
get it to work. So, but then again, Sudhir, we're going for a 25% profit, and it was a 94% win rate. Many of those trades went on to get much higher than 25%. So I think it's in the range for working.
Yeah, I think you're probably right.
Yeah, I think you're right too. But like if you had, just like an example of what Sudhir's talking about. So if we had, this was our entry day, or that's the bottom. So the next day, that's a bottom, right? And
Yeah.
then this day, okay, we're good. Next day, do you enter like as soon as it touches here, or are you waiting, or it's just like a wash now because it's like below, it's just, I just think we need like concrete rules,
Absolutely.
yeah,
Absolutely.
but or you got to just update us and send out emails like, Lee found a McClellan, Lee's McClellan trade, just, blast us on email.
Yeah.
Right. So,
Yeah.
okay. All right. Good comments. Anyone else got anything from me or Joe fires off here? All right. Well, thank you. Joe, you're up.
All right, Josh, yeah, just really, the NDX was probably the only other chart I would pull up. Similar, and really the level there is going to be in the neighborhood of it doesn't show up as much, but again, a mid-tier level, 11,500 basically is the 3/8 retracement of the small move and a 5/8 retracement of the big move. So I always find those converging levels to be useful. Sometimes they hold, obviously, and sometimes they don't. But yeah, 11.5 in the NDX would be the next level down. Just as I said, SPX in the 39.25 range, and the Russell, somewhere between 8.10 and 8.25, to the downside. So if we happen to break, but it'll be the test, as you said, to see whether or not these stop loss levels can hold over the next day or two. And then just one more thing, Josh.
Yeah.
I wanted to dive deeper into our extremes, and I don't have anything concise about that yet, except that when we're north of 80%, on the pie, it's quite an extreme. It happens so infrequently. The analysis that I thought about 3 months, 6 months, out, I don't think is really worth talking about. But just going backwards, we basically had 8 days, and most of the indexes topped 2nd or 3rd of February, from January 31st till the 7th or 8th of February, we were north of 80%. I think there's something in the level of state eights. I remember you've talked a lot about state ones. We get up to that 45% level, right? Where we're over what?
Yeah,
I don't want to put words in your mouth, but that's my recollection.
yeah, that's correct.
On the flip side, state eights below 15%, and on a rare day below 10%, also something to keep an eye out on, just in terms of extremes. So, you know, I think there might still be a little bit more to glean out of this, but that's all I have at this point. You know, at keeping an eye on those, you know, state eights individually as well. Next time we get up into that extreme, which, you know, from the looks of things, hell, you know, we had a couple of years there where we didn't have any extremes
Right.
over percent. So, you know, if I come up with some more stuff, obviously I'll offer it. But that, yeah, no more charts at this point. Next week I will, I'll get into the earnings. And does anybody have any comments? You know, if the market were to hold here and get back up on the horse, my sense is, you know, the majority may be, you know, more bearish than bullish. But any sense of where leadership may come from in the market? Anybody? Because I don't know. I always, you know, like to see financials, but you know, it's such a market of stocks at this point. I can't get my head around really a specific area of leadership, and I just wondered if anybody was thinking about that. And if not, you know, no biggie. Maybe we can talk about that a little bit next week too, Josh.
Okay. Yeah, we can look at all the sectors and see what's going on there. Been a while since we reviewed that. Okay. All right. Anyone else got questions or comments before we close it up? All right. Well, we'll do it again next week. Thank you all for tuning in.
Thank you.
Thank you.